Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me is my co-host, CoinDesk managing editor of Global Capital Markets, Lawrence Luton. Happy Monday, Lawrence.
Happy Monday, indeed.
Let's take a look at the markets right now. Not so happy there. Taking a look at Bitcoin right now, the CoinDesk Bitcoin price XTX index is below the $30,000 threshold, down about 1.3% over the past 24 hours, trading right now at $29,857. The CoinDesk Ether price ETX index is at 2026, also down about 2.5%, and the DFX CoinDesk DeFi index is at 142, tracking losses about 3.9% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader of crypto news, events, and data. So how are volumes, Lawrence? And we're still seeing a slump in the markets.
Yeah, and that might happen for a while. I mean, as long as things are happening in the equity markets and the traditional finance markets, we might be in this for a while. And I think we have to be serious about the fact that this could be a prolonged slump.
In the meantime, we're also tracking the collapse of the Terra Luna ecosystem, and the Luna Foundation Guard has announced that they have 313 Bitcoin left after the collapse of Terra Luna and UST. They used to have over 80,000 Bitcoin, so it has everyone asking, really, where's the missing Bitcoin?
Yeah, and that's something that it exists, right? It's gone onto a couple of exchanges. We know it exists, but there was a buyer for when LFG sold. The real overall question, or the real overall issue here, is that this didn't help one iota in shoring up the problems that UST and Luna had. There was no way out of it. It just, once it got into a death spiral, that was it.
It also has a lot of folks wondering, what was the fallout from platforms and exchanges that were listing Terra Luna as well as UST. And joining us now to discuss is Lennix, Director of Financial Markets at OKX. Hello, Lennix. Thanks for joining us. So we know at OKX, you guys had a product called OKX Earn, where users could stake UST on your exchange and earn some yield. So I can imagine you had considerable UST reserves. Maybe you could walk us through what happened at OKX and the impact of this collapse on your exchange and users.
Oh yeah, we already has informed all our customers to actually redeem their UST right before the big crash. So our user is protected. But unfortunately, the entire Terra ecosystem has suffered the death spiral. So you can see that we did a lot of work on these few days. We actually need to comment off and get delays and release the Luna in terms of our derivatives, and also because the entire OKX back in the days, actually the market is super volatile. We think that having a derivative in place would be a risky move to our client. So we actually have our product and tech spend a lot of time very busy in delisting the Luna derivatives, and also we also notify all the users to unstake their UST within the Anchor protocol and everyone right before the big crash.
Everyone right before the big crash. So are you saying all your users were able to take out their UST and Luna before the crash?
I was saying, right before the crash, whoever have stake in USD earned, that all of user in OKX has been notified, and then they can redeem and take out their UST right before the crash. Yeah.
So Lennix, there was a big demand, obviously, for UST, primarily because of the incredible rates you could get on Anchor. And that helped drive a lot of the interest in this whole ecosystem. Now that has shown, at least in this situation and a few other very known failures of algorithmic stablecoins in the past, are you reluctant, if not unwilling, to list algorithmic stablecoins going forward, despite, let's say, consumer demand. If these models continue to show incredible amounts of flaws and potential hazards for investors, despite the large rates that are being dangled in front of them, are you guys willing to say that's enough? This isn't going to work here. This shouldn't be on our exchange.
I'm sure the bar of listing algorithmic stablecoin would be very, very high. We're going to be very, very high. So theoretically, the algo stablecoin still work as long as you have sufficient stable Exec back behind your back. So even if you create a model look like Lunar, a UST again, I'm sure that you need to put a cap within your collateral, within your UST value, which is your stablecoin value, against your collateral, maybe 10 times more, even 100 times more, in order to protect your value, to maintain the pack of your value of your algo stablecoin. I think that's like the prerequisite for OKX to list any in future any stablecoin,
right,
any algorithmic stablecoin.
Would you unlist any?
Sorry?
Would you delist any algorithmic stablecoins? I'm not sure how many. Do you have any currently trading on OKX, and is that something you would want to delist?
No, we don't have any algorithmic stablecoin right now currently on OKX platforms. The biggest one is still Lunar and UST right now. So we still have a look on the situations right now, whether we should delist it. We're still monitoring the situation right now.
I wonder how much in reserves did you have in UST and in Luna on the exchange, if any at all, and what would be the impact to OKX due to a crash like this?
Yeah, we don't have information on hand about the reserve on UST. I don't think we have a lot, because we actually we don't invest on Lunar or UST. We don't buy UST. We charge commissions. Some of them based on UST as well. So I don't think there's a lot of impact on OKX as whole. So what's more importantly as a platform operator is whether anything related to Lunar product, our financial product, our crypto product, are safe and sound. So after the aftermath, I think our platform, especially on UST and the Lunar derivatives, is actually working so fine. We don't have any issues in terms of false liquidations or big market impact to trigger even more bigger market turmoil on OKX product.
Mm-hmm. Why do you think it got, so many big names went into Terra Luna? Why do you think it got so big so fast?
The yield is actually very attractive back in time, and also we are undergoing a pretty long bearish markets for Bitcoin, the market as a whole. Those people are looking for yield enhancement product. So in fact, it's obviously got all the attentions. People are looking for asset allocations, a medium for asset allocation. So the yield for 90%, maximum of 20% is very, very attractive under this bearish markets. Yeah. So if you think about that, it makes sense on the yield perspective. But people doesn't really take in the deep dive on their map.
Well, that's the thing. I mean, the yields were so attractive, it attracted all this attention, but in the end, they were unsustainable. And a lot of folks were criticizing the Anchor protocol for it being sustainable and the likelihood of it possibly depegging UST and taking the whole ecosystem down. So I wonder, what are the lessons learned from this?
The lesson learned from that is so we need the entire industry need to take a really high bar in evaluating on investing, sharing, or listing the any kind of stable coin. They basically just backed by mathematics or any kind of algorithm or any kind of financial design. So eventually, if you want to do something stable that is backed by a really volatile asset, we need to put a really high bar in terms of collateralization ratio. We need to we need to have a minimum of industrial standard that you need to put a 10 times more stake in order to protect your stablecoin.
What do you know about the kind of investors who had their who had wallets with UST and Luna? Do we know about average sizes on your platform or at frequency of trades, things like that? Is there anything that stood out with those investors and those traders on your platform compared to, say, Bitcoin or ETH? Is there some information we can glean about, or were they larger or smaller than average?
We took a look. So the UST holder, and it's a little bit different than Bitcoin and Ethereum holder and farmers. So they already have a very deep understanding on Anchor protocol, and they already stake and have a really long history on staking Anchor protocol already. So UST is part of their portfolio holding, and so that they're in deep dive on their and they're deeply involved in the Terra ecosystem. So I think in terms of user base, I don't have any numbers on trading frequency besides on my hand, but in terms of user base, I think it's very different than Bitcoin and Ethereum holder.
All right. Well, it was a long week. We have a new one. And Lennix, thank you so much for shedding some light on what your exchange went through during this crisis, disaster in the crypto markets. Thanks for joining us. That was OKX Director of Financial Markets, Lennix Lai. All right, coming up, we've got a crypto markets update with blockchain infrastructure firm BTCS. Seeing a lot of red out there. Taking a look at Bitcoin right now, the CoinDesk Bitcoin price XVX index, however, is down about 0.7%, now over the $30,000 threshold. The CoinDesk Ether price ETX index is at 2038, tracking losses about 1.8%. And the DFX CoinDesk DeFi index is at 142, also swinging back about 3.7% over the past 24 hours. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Past week was just one in a long string of losses for crypto. Joining us now to discuss this recent slump is Charles Allen. He's CEO of blockchain infrastructure firm BTCS. Good morning, Charles. Welcome back.
Good morning. How's everyone doing?
Good seeing you again. Of course, this has been a tough market for a lot of people, particularly last week. Last week was a very painful week for many small investors, retail investors, as well as institutional. What happened, in your view, to lead to this downturn, and what does this upcoming week look like for you?
Well, I mean, obviously, you guys have talked at length about Luna, right? Obviously, that instills fear, right? At the end of the day, markets are kind of emotionally driven, right? If the perception by both retail and institutional investors is that things are slowing, it's going to have a dramatic effect on the market. There's also, at a macro level, we're coming out of a recession. There's the war in Ukraine. Inflation is at all-time highs. And so the general markets are down pretty hard. I mean, if you look at the NASDAQ from its, recent all-time high of, 17,000, we're down around, 12,000. So, you have the confluence of both the markets, general equity markets and crypto markets coming down at the same time, which really hasn't happened in a long time, right? If ever, right? It's, we've had these crypto winners in the past, which have been very short lived, but the big market cycles, the dot-com bubble bursting, the financial crisis in 2008 and 9, we haven't really seen, both of these aligning at the same time. So I think this could be a little bit of a longer cycle. Hopefully the crypto markets recover more quickly than, as they have in the past.
Charles, how long do you think this will last? And would you start calling it a crypto winter?
I don't know the technical definition of a crypto winter. What I will say is, I think this creates a lot of opportunity. Having been in the space since 2013, I remember when Bitcoin was $1,000 in January 2014, and it dropped, to under $200 in January 15. We were actually trying to raise money, and we talked to tons of investors and said, Bitcoin, crypto's done, pack your bags, go do something else with your life. The reality is, in 2016, there were 5 million crypto users. As of 2021, there's over 220 million crypto users. So I don't think the technology is going anywhere. It is cryptocurrencies and blockchains allow for the movement of assets on a global basis without a trusted third party. And that's as big as the internet. So, a pullback of Bitcoin from over 60,000 to, 30, or Ethereum getting cut in half, in the grand scheme of things, if you just kind of scale back and say, hey, let's not worry about what happens next week. Is this technology here to stay? So, I think the writing's on the wall for that, right?
Charles, where would you see the opportunity then? Do you see it in Bitcoin, ETH, or do you see it in more of the other alts?
We're a huge believer in Ethereum. I think there's opportunity in Bitcoin. I think there's probably more use cases for Ethereum. You can really build on top of it. Bitcoin, we've seen faster transaction speeds with the Lightning Network, but there really hasn't been a great solution that's been used to add smart contracts. So I think in terms of market opportunity, the Ethereum and the alts is probably where there's more upside potential, albeit there's a higher risk profile, right, than the majors like Bitcoin.
So Charles, the retail investor that's been looking at this for a while, they were drawn to crypto because of these incredible returns, and they were drawn to Luna because of these incredible returns. This whole thing collapsed. Luna and Terra imploded, and Bitcoin as well over the past, say year has lost a lot of money for people. Longer term, are these kind of losses yes, it is volatile and people do make a lot of money. But do you think that over time, these kind of implosions that happen because of faulty models, et cetera, coupled with losses in the majors such as Bitcoin and Ethereum, do you think that shakes the confidence and the interest of the retail investor and delays any adoption and maybe prolongs any slump that we might have?
It'll definitely slow adoption, right? But it also does other things, right? Thoughtful regulation is I think necessary, right? With the amounts of money that we're talking about in crypto now, having well thought out regulation to protect both retail and institutional investors, I think is key. And hopefully we don't have knee jerk reactions to things like Luna, and we the regulators come out with regulations that allow for innovation of the technology, allow hopefully for the U.S. to be continue to be a leader in the space. But I think as people lose money, it's hard, right? If you bought Bitcoin at 60,000 and it's at 30, and you went in more than you probably should have, this is a really hard thing to swallow. And if you have liquidity issues or needs, it's very difficult. I look at things, like I look at our company balance, and our cost basis for Ethereum is 1,000. And we'd been buying it when it was 230, and we kind of averaged in at 1,000. And so, at 2,000, we're still up huge. So it's kind of, what is the lens you look at? Is it, are you stressing over your portfolio every day looking at the price of Bitcoin? That's probably not healthy, right? If you believe in the technology, look at it almost as buying a stock, right? If you like a stock, do you look at every single day of the price? Come to a thesis, right? If you like Apple because you think they're going to make the next great product, invest in that company, right? And, watch it grow. Yeah. And so I think if you look at crypto and you believe that it's going to be here, just take a longer term view.
I guess that's what's so tough. I mean, we just saw the charts for Terra and Luna. UST was at 8.5 cents. It's supposed to be $1, and Luna is less than a penny. I mean, these folks in the community really believed in their project, and there was a lot of brain power into these apps, and so it just goes to show, you know, there's a lot of smoke and mirrors in crypto, and you got to really be prepared for these kind of downturns because it's going to separate the real players from the protocols that just don't work. All right, we got to end it there, Charles, but thank you for your analysis. That was BTCS CEO Charles Allen. All right, coming up, we'll be tracking the Luna Foundation guards Bitcoins with market surveillance firm Solidus Labs and our gold policy and regulation update with managing editor at CoinDesk, Nick Day. All right, welcome back. Let's check in quickly with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So, are you tracking any of the fallout from Terra Luna? Is there going to be regulation possibly on stablecoins or algorithmic or otherwise?
Well, good morning, and it's the question of the hour, isn't it? So certainly there's a lot of increased attention from regulators. A lot of regulators and lawmakers are now looking at Luna as something that maybe they should be paying attention to. But I haven't heard anything about specific regulation attempts yet. Nothing, seems to be in the works right now regarding, whether there are investor protection concerns, whether there are, financial stability concerns. So it doesn't look like we're yet at a place where regulators or lawmakers are going to come in and say, all right, well, here's what we're going to do because this is a situation that cannot be allowed to repeat. That being said, definitely it's on a lot of people's minds. In the U.S. alone, we've seen Treasury Secretary Janet Yellen, as well as numerous lawmakers bring this up during Financial Stability Oversight Council hearings last week. And around the world, Singapore, for example, which is where Do Kwon allegedly resides, they're paying attention to this. They put out a report last week saying basically, okay, yeah, this is a thing that we're keeping an eye on. This is concerning.
Yeah. Do you think that this would actually accelerate things in terms of in the U.S. particularly, where stablecoins have been a topic at the forefront in discussion about crypto for many months now?
I actually don't. So the interesting thing about the U.S. and how it's been discussing stablecoins is almost, unanimously, they've all focused on asset-backed and reserve-backed stablecoins and made a note to, specifically say that algorithmic stablecoins, such as UST, are a different beast entirely. So, they are drawing this distinction between things like UST and similar stablecoins and things like USDC, USDT, etc. And all of the regulatory efforts have been focused on that latter category. Meaning, if they do want to create some kind of algorithmic stablecoin regulatory framework, they're going to not have to start from scratch necessarily, but they're going to have to start from a very early step. They're going to have to first come up and say, okay, here's how we're defining this. Here's how we're going to look at this. Here are the concerns we want to take care of. Here are the investor concerns we want to take care of. Here is what we're thinking about in terms of requirements for maintaining the peg. So it's not going to be, a start from scratch scenario where, with the stablecoin situation, you had people saying, okay, here's how we're defining stablecoin. But it will be pretty close because they're very different from, the stablecoins that have been discussed so far and the stablecoins that have been covered by draft legislation and reports and things like that.
Yeah. Well, it's interesting that they're sophisticated enough to distinguish the differences between algorithmic versus other centralized, collateralized stablecoins versus other regulators in the world. All right, Nick, thanks for that update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
1 week ago, the Luna Guard Foundation had over 80,000 Bitcoins in their reserves, as well as other cryptocurrencies worth a total of about $4 billion at the time. Where did it go? Joining us now is Chen Arad, Chief Operating Officer at market surveillance and risk monitoring firm Solidus Labs. Hi, Chen. Thank you for joining us. So the reserves were supposed to help UST keep its peg. So the burning question on everyone's minds is, where's the Bitcoin now?
Thank you for having me, Christine. Great to be here, despite the circumstances. It's a natural stage for any new industry, new asset class to deal with challenges like this. And of course, the question is, how do we move forward and address this? I think that, looking at the big picture here, at the end of the day, a lot of crypto services essentially propose new ways to provide financial services that require less middlemen, replacing various systems that exist in traditional finance with very sophisticated mechanisms that are code-based. And that's, in that sense, what we had here. You mentioned earlier, Christine, the vision for Terra and Luna and Anchor and many other services in that ecosystem was extremely compelling. Very smart people were thinking about this for a long time, including on creating, funds to absorb unexpected, occurrences like we had last week. But we do need to remember that in many of those services, it's still not battle tested, not stress tested. And in that sense, even though there was an attempt to allocate, funds and even start transferring them into the Terra ecosystem, to essentially return the peg, it simply wasn't enough. Of course, it's also connected to the fact that all of this operates in a generally nascent ecosystem where, for example, a lot of those funds were in Bitcoin, which is still, at the end of the day, very volatile and just another factor that kind of added to the fact that it wasn't enough. At Solidus, we specialize in monitoring trade behavior, and we work, of course, very closely with with partners on the on-chain analytics side. And there are indications that the money have moved various places. But again, it's I think maybe one of the biggest conclusions that I have for the moment is that Terra specifically was in a lot of ways uncharted territory when it comes to risk monitoring. There are some of the risk monitoring capabilities were less advanced there than they were in other blockchains, where they've reached a pretty high level. And so it makes it harder to anticipate an alert on something like this when it happens. And I think it's something that everyone should remember. There's a lot of opportunity in those places. Anchor was an amazing opportunity for the average investor, but in part because there's a very high still risk in some of those cases. And we all have to evaluate that when we decide where to allocate our money.
Well, I think that was the problem. Anchor was very attractive for this 19.5% annual percentage yield, but it was ultimately unsustainable. And in terms of battle tested, Do Kwon had previously worked on a similar algorithmic stablecoin, Basis Cash, that ultimately failed. Now, he said that, and he called a Ponzi scheme, he said that Terra Luna would be different because of the different incentives, such as Anchor Protocol, but that ultimately ended up being the demise because the Anchor Protocol and the yields that it gave were unsustainable. And so they were supposed to be a decentralized algorithmic stablecoin, but in the end, they realized that, if there was a big market event, we're assuming that that's why they started gathering this massive reserve of cryptocurrencies to back up UST in case it started to depeg, which is pretty much what happened. Everyone wants to know, what happened to this huge stash of Bitcoin and other cryptocurrencies. Over the past couple of days, Elliptic released an analysis, and they said, a lot of the reserves, the Bitcoin reserves, went to Gemini. They also went to an account into Binance. But I guess, since you're a market surveillance firm, what happened from there? It just kind of went into a black box.
So again, I keep on thinking back to the May 10. The 2010 flash crash that happened in May that year. It happened in swaps markets because of cross-asset arbitrage. At the time, Gary Gensler, who is today the chair of the SEC, was the chair of the CFTC, and he called for an investigation. And we talked at the time; it was a few hours of trading that caused hundreds of billions in loss, and that is on a traditional market that has been tested over and over. But new tools were introduced that created some new risks and challenges. It took 3 months to collect that data, and ultimately it led to it led Gensler at the time to introduce a comprehensive surveillance program for swaps, exactly so that answers for the kind of questions you're asking could be given in real time, or at least closer to real time in the future. And in that sense, there's a lot of questions that are still being answered on, that are still being investigated, by our team and other teams like Elliptic, who are partners of ours, in order to understand exactly what happened. Again, we need to remember. Sorry, please go ahead.
Yeah, so I guess the bottom line is, were those Bitcoins actually used to shore up UST? Did they actually do their job, what people expected they would be used for, which is, had the Bitcoin, it was a form of asset to back UST in some way. Did they actually do that, or did something happen to it that they don't know? Which was it?
So again, it's still going through investigation, and when risk monitoring is not, integrated or still in early stages in a particular ecosystem, it naturally means that it's harder to say exactly what happened very quickly. There's no question that this is a very big incident, and we've heard the two guests that spoke right before me. Lennix really emphasized the need to raise the bar, raise the standards for risk monitoring, so that it's, first of all, possible to alert in advance when something like this happens. And I can say we're working very closely with a lot of platforms, blockchains, and also on the buy side with investors in order to provide this sort of alerting. But the other piece is, of course, that when something goes wrong, and something will go wrong, definitely in a new ecosystem that's still evolving, it still happens in traditional finance, right? So something will always go wrong. The ability to very quickly understand what exactly happened so that it can be rectified, and if there's people can be held accountable if those funds were not used properly, depends on the ability to understand risk, and the potential of decentralized finance at the end of the day depends also on the ability to mitigate risks and provide those explanations to regulators, to the public, to investors. In this case, again, it's still being investigated. To your question, it appears that yes, there were attempts to use those funds, but I can't speak with 100% clarity yet, as again, this is still being investigated, will continue to be investigated over in the near future.
Yeah. Even if those Bitcoins were used to protect UST and fail, the fact that it failed, and this is the question we've asked the other guests today, does that affect the long-term prospects of the crypto markets in general, in terms of integrity, and also in terms of market participants' willingness to get back in the game now that they've seen something this big collapse so spectacularly and take out so many people's fortunes with it?
I think there's no question that this impacts how people perceive our industry. And I think it's also important to keep in mind that, it isn't the first, it isn't the first incident in a while where there's a really big incident that causes a lot of people to lose their money. I mean, we can think back, a couple of months back and think of a few hacking incidents, wormhole access, etc. All of these things at the end of the day impact how people perceive our industry. Now, it's natural that in a new industry, there are new risks. The question is, how are we working as an industry to continually deal with these issues in order to prevent them? I mean, I think that stablecoins specifically are critical, needless to say, in order to attract more people to crypto, have a place where you can custody crypto while you're switching between assets, etc. That is not very volatile. The fact that this very, very promising, very compelling idea of an algorithmic stablecoin, and the leading one really, collapsed in a lot of ways, requires kind of going back to the drawing table and coming back to the public and obviously to regulators to explain, how do we prevent this? How do we create something like this that is actually sustainable? Obviously, you have stablecoins that, in a lot of, really innovate financially, but also rely on, the tried and tested idea of, real world collateral like USD or others. But, this really shows in a lot of ways that, the algorithmic solutions here still need a lot of stress testing. But, we need to remember that this is an opportunity to, we're the new kid on the block because of issues like this. Crypto is, there are a lot of issues in traditional finance as well. We're trying to solve them. We just need to be very, very honest and careful in how we do it. And one of the most important keys to that is mitigating the new risks. Otherwise, all of the potential will not be fulfilled because, we will lose the faith of the public over time, and definitely that of regulators. And I think that's the most important message that comes out, not just of my interview, but the other interview is right before me. That we have a lot of work. We're committed to doing this as an industry.
All right, Chen, thank you for joining us, and we'll wrap it up there. Just to mention quickly, though, the Luna Foundation Guard has released a tweet thread about 4 hours ago explaining what they did with a lot of the reserves. They swapped it for a lot of UST. Where it goes from there, I mean, they said that they lent it out rather than traded it directly themselves. So where it goes from there remains a mystery. All right, thank you, Chen. That was Solidus Labs Chief Operating Officer, Chen Arad. Let's check in with Crypto Twitter for our tweet of the day. This is from Lynn Alden, the founder of Lynn Alden Investment Strategy, tweeting, "I'm all for innovation, but investors should be careful because a lot of projects in the crypto space tend to obfuscate trade-offs, claim more decentralization than really exists, rely on unsustainable incentives, corral retail speculators into being exit liquidity." Guys, got to watch out. That's it for First Mover.
That's literally every day in crypto.
Just a regular day in crypto. Thank you, Lawrence.
Yeah.
I'm your host, Christine. Joining us later is The Hash at noon Eastern and all about Bitcoin at 3 o'clock with yours truly. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Luna's crash remains in the spotlight. Welcome to the Daily Forecast, May 16th, 2022. I'm Megha Chadha of Forecast, covering all things blockchain. After a roller coaster weekend of pump and dumps for Luna, Terra's UST has not regained its US dollar peg, and questions are being raised over the need for regulation and what investors should be aware of. We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
We are taking a deep dive into the fallout from Terra's troubles today. First up, in South Korea, financial regulators have reportedly begun an emergency assessment of digital assets following the Luna fiasco. The move is in line with the government's plans to establish regulation on cryptocurrencies with its Digital Asset Basic Act. One government official told local media that the Luna debacle will likely speed up enactment of virtual currency regulations in South Korea. Currently, the government has no legal basis to take direct measures to examine or supervise the Terra platform, as existing laws are only geared towards anti-money laundering issues. South Korea's upcoming digital asset bill is expected to go into effect in 2024. And while the details of the legislation have not yet been revealed officially, it's predicted that it will focus on investor protection. Meanwhile, South Korea's National Police Agency has revealed it is closely monitoring the Luna situation, but there's no plan to investigate Terraform Labs just yet. It added that no civil complaints have been filed against Do Kwon when asked about the news of the CEO getting sued overseas. Over in China, state-backed publication The Economic Daily has praised the government's crypto ban amid Luna and UST's crash. The commentary piece describes Beijing's crypto ban as, quote, decisive, powerful, and timely, adding that such measures prevent cryptocurrency risks from spilling into the country's economy. But Chinese investors are still paying close attention to the crypto market, as Luna and Bitcoin were ranked as the 9th and 12th hottest search terms on social media platform Weibo during last week's crash. China banned crypto trading and mining last September, leading to China-based exchanges and miners fleeing overseas. You can find those stories and more at forecast.news. Continuing with Luna, the price of Terra's native token repeatedly pumped and dumped over the weekend, becoming as volatile as low-cap meme currencies. Meanwhile, many have questioned Terra's response and founder Do Kwon's plans for a revival of the ecosystem. Forecast Lachlan Keller has more.
Luna hit an all-time low on Friday, and it has remained extremely volatile since, with data aggregator CoinGecko warning over instability in both its price and liquidity. Meanwhile, Terra's algorithmic stablecoin UST has not regained its US dollar peg and was trading around 16 US cents Monday morning in Asia. Terra network developer Do Kwon posted a plan on Saturday to revive Luna, suggesting reconstituting the network and resetting ownership to 1 billion tokens to be distributed among current and former owners. However, Binance CEO Changpeng Zhao said this would not work, calling the plan wishful thinking. Ethereum co-founder Vitalik Buterin also weighed in, saying that algo stable, a term used to describe algorithmic stablecoins, has become a propaganda term serving to legitimize uncollateralized stablecoins by putting them in the same basket as those which are collateralized. He says it needs to be emphasized that the two are very different. Many users responded directly to the plan on Terra's research forum, with one saying that it comes off as trying to put a band-aid on a dam. They went on to ask whether Kwon would consider helping members of the community out with some of the money he's made from Luna. Several additional proposals have been made by the forum's users on ways to either help reimburse those who have lost out or to revive the network. While others have posted on social media, including Twitter, saying they have lost their savings and complaining that they really believed in Luna. Of course, we'll be keeping watch on whether any of those plans come to fruition. For Forecast, I'm Lachlan Keller.
And finally, in an exclusive interview with Forecast Editor-in-Chief Angie Lau in Singapore, Piyush Gupta, the CEO of DBS Bank, talked on the issues raised by Terra's crash for regulators.
So obviously there are weaknesses in the system. You can short sell Terra and Luna exactly as you can short sell any other currency. If you had retail investors sitting on this, relying on the technology today, what would you go and say to them? That, well, the technology was great, but something went wrong. And I think as responsible regulators, they're quite mindful of that. So I understand where regulators are coming from. Now, to my mind, like I said, I think technology is here to stay. I think the trains left the station. So the right answer is not to try and regulate it away, but to regulate it so that you can get into it in a way that you can put OB markers and acceptable boundaries, given the two concerns that the regulators have. It is possible, you're right, that 5 years from now, you don't need regulators. But that goes back to, like I said, DeFi evangelists. You could argue that 10 years from now, you don't need countries, you won't need nation states, you won't need central banks, you won't need banks, and smart contracts will run the world. I have to say I'm a little bit less certain that this world will come to pass anytime in the next 10 years.
I think that the growth of this industry actually does depend on stability and market confidence, and therefore regulators actually play a huge part in helping really seed the next phase of growth for the blockchain industry and Web3. The difference is, how are those conversations being had right now? So curious, you're really leading the charge, putting a lot of capital, putting a lot of strategy into this play. How often do you talk to, your cohorts in the governmental agencies and the regulators who are very much, a big part of your business?
Sanji, we talk to them quite frequently. But I think it's fair to say that there is no common view among regulators. You have regulators who would essentially say, look, this is too dangerous, just regulate it out of the formal banking sector entirely and let somebody else deal with it. You have other regulators who would say, this technology is here, we should use it, and use it in a pragmatic way and see how we can actually work to put the right safeguards in place while you do that. I was interestingly on a call with several central bank governors a few weeks ago, and it was quite interesting how that range of opinions manifested itself from different central bank governors. So there's no one size fits all, even in their own thinking.
What would you say the spectrum is on the far end?
Well, on the one end is just regulate it. And when you raise the, as banks, most of the banks would say, if you regulate it, you don't make the industry disappear. You don't make the participants disappear. You just squeeze it out of the formal system into the informal system.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Forecast Megha Chada. Until next time.